Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update here. We're going to update the Track Your Dividends site, the share site, to show you guys the performance of the portfolio. And yeah, just talk about a few things. Last video, we did do an update on the dividends that were paid out for the month of May 2022. So wasn't bad at all. So we'll just get right into it. If you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So today we did make a few purchases in the market here. But the portfolio today closing out at the end of the week at $12,422.27 on the day, down $102.99, down 0.82%. For the 1 week, we're up $136.28, up 1.11%. For the 1 month, we're up $27.27, up 0.22%. For the 3 months, we're down $556.03, down 4.28%. For the 1 year, we're up $725.38, up 6.2%. And for the all, we're up $1,646.74, up 15.28%. In the cash count, we have a whopping 27 cents. And so today we did make a purchase in BCE Inc., which closed out at $68.57 Canadian, down 40 cents on the day, down 0.58%. We now have 17 shares of this company. This company is also known as Bell. Ticker symbol BCE. Total position value of $1,165. Average price of getting in is $61.36. Holds about 9.38% of the portfolio. Our return is about $122.58 since starting this position, and that's 11.75% return. We head down here. We did do a limit buy because we didn't have that buffer in the cash account to make a market buy, so I'm not too upset about it. So we bought 2 shares today at $68.75, which came out to $137.50 Canadian. As we always do, every time we purchase full shares, we always put in $25 in a fractional buy into the Vanguard S&P 500 Index ETF. As you can see here on the screen, it's closed out this week at $92, down $1.40, down 1.5%. Now, this is the non-hedged version. There is a hedged version against the US dollar. But anyways, we now have 5.6359 shares. Total position value of $518.50. Average price of getting in is $97.58. Holds about 4.17% of the portfolio. The return is wrong anyways, and we did a fractional buy here. We got 0.2711 shares at 92.19, which came out to 24.99 Canadian. It always seems like we're hitting that 24.99 area, off by a cent, not getting that 25 even, but it is fine. And that is the portfolio. So we'll head over to trackyourdividends.com and we'll go ahead and update the positions here. So if you build the portfolio as it stands, without the updated positions, your portfolio yield, so your return on investment, would probably be 3.62%. Our yield is about 4.22% with the strategy of dollar cost averaging, of course. And the annual income for the year from dividends is $442. So BCE here, 15 shares. We now have 17. So we'll go ahead and add that holding. Ticker symbol for Bell is BCE. Now, because it's Canadian.to, there it is. 2 shares at that, and $68.75 was the price. And we'll go ahead and add that holding. Things change. We'll add one more, which is BFV.to. We purchased 0.2711 of shares. Cost per share was 92.19. Go ahead and add that holding. And boom, there it is. So now you can see the yield is at 3.63% with the updated positions. Return on investment is about 4.23%. Our annual income is at $450. And as you can see here, Bell Canada, ticker symbol BCE, is yield on cost for us is 6%. If you were to build it today, if you were to buy it today, 5.37. Annual income from dividends, of course, divvied up quarterly is $62.56. If we head down to Vanguard here, you would get a better yield today if you were to buy it today. Our yield is 1.13. It just keeps going down, or just staying in the same spot. And our yield is about, our dividends are about $6.18 quarterly. And so that is trackyourdividends.com. And we will head over to ShareSite. On this side of things, I already updated it. So as you can see here, if you're one of those people that really likes to look at graphs, there it is. We were stagnant, kind of flatlining, start of April, and just flatline, a little bit of digression, and then all of a sudden we have this jump. Okay. Capital gains, we're down $524.83, down 4.06%. In dividends, we've received about $155.60, which contributes to the performance of the portfolio, which I do like about ShareSite. It actually includes that, so it's very nice, so I don't have to do the calculations. And even if I did do the calculations, I wouldn't know how to do the calculations, to be honest with you. Currency gain, we are down $21.76 because of the US positions that we hold in here, which are Qualcomm and Cisco Systems Inc., which are both on the NASDAQ. Currency gain is down 0.17, and our total return with all the numbers here from capital gains, dividends, currency gains, total return is down $390.99, down 3.02%. Now, I will take that negative 3.02% any day in this current market, and I'm totally fine with it. And the reason why I would take that any day is because I know, excuse me, there's portfolios out there that are just getting wiped. Not like completely wiped off the market, but I've seen managed funds. I've looked at funds where they're managed by banks or mutual funds, some ETFs. And of course, we know some of the ETFs here, they're just down. And I mean, we can take a look here actually. So we'll head back to here and we look at VFV. And since we started this whole first purchase, which was like the beginning of this year, if we just go to the calendar year here, if I could do that, but I can't. But since our first purchase, which was in January 2022, this position alone is down 5.59%, and that's a managed fund ETF, a little more like passive. But you can see the portfolio is only down 3.02%. And what I'm talking about is mutual funds. I did look at some mutual funds, not that I purchased any, but even the most conservative mutual fund is like down 10%, and I'm just like, wow. And on top of that is a huge management fee of like 1 to 2%, which is not huge. It doesn't really matter in my honest opinion, but to a lot of people, some people, it does hold a big weight in their investment portfolio. The thing is, like I said, I would take that negative 3.02 any day of the week this year, because I'm seeing a lot of wiped out portfolios that are down 10, 20%, which is right into the bear territory, of course, bear market territory, and which we are kind of in a world of uncertainty. And I think we're in more of uncertainty than we were back in 2020 when the whole thing happened. But even now, we don't know what's going to happen. I mean, in Canada, you look at the gas prices, they're hitting record highs like every day. And yesterday I looked at the gas price. I was kind of like shook at that moment, and we don't know where we're heading. Housing market in Canada just keeps on, says it's cooling off, but I don't see it cooling off at all. In fact, I see a lot of people going west or inner Canada, where like Alberta, Saskatchewan, people are looking in those areas. And I know like housing is unaffordable for a lot of people, but I don't know how much more it's going to be unaffordable. Like it's going to be like, it's going to take a couple generations for you to buy your first home. And that's kind of a strange thing to think about, but this market is really uncertain. I don't know what's going to happen. And so when I see comments like some of us can't do $100 a week or whatever. I'm not asking you. This is not financial advice. I'm just showing you what I'm doing, and it's not any piece of advice for you to do, because this channel is not about financial advice. It's just showing you guys and taking you along the journey of how I'm building a dividend portfolio. If you can only put $100 a month, then so be it. I'm not going to do that because right now this is what works for me, and you need to do what works for you. So if you can only do $100 a month, you don't have to do what I do. And I encourage you not to do what I do, because I don't know who would follow somebody who has a negative 3.02% in performance in the portfolio, although that is better than most. I'm not a know-it-all. I don't know what's going to happen in the market. And I'm telling you right now that I don't know, and that I'm uncertain. And I think everyone else is uncertain. No one really can tell what's happening. Should we keep it in cash? Should we invest it? To be honest with you, in my opinion, what I'm going to do is I'm going to keep on investing, regardless of what happens. And I'll continue to build that habit of putting money away or investing it, because it's sitting in cash is not doing me any good anyways. I need it deployed. I need it to do something. And even if it sits in a bank account, inflation is going to eat away at it. And so whether you're putting $25 a month, $25 a week, $100 a month, $100 every few months, it doesn't matter to me, and it shouldn't matter to you. You do what you need to do to feel like you are putting money away for it to work for you to grow, so you can build a dividend portfolio. It doesn't, to be honest, don't compare it to what I'm doing, $100 a week, because right now we're all in the same boat. Regardless of whatever amount you're putting in, we're all in the same boat when it comes to the uncertainties of the market. Interest rates are rising again, and gas prices are going up. Cost of living is going up. We sound like a broken record this whole year. It's been the same thing over and over and over again. And if you haven't made a shift in allocating your funds, looking at where your money is going, looking at the things that cost money, and shifting the way you allocate those dollars, then maybe the time is right now, because we're about halfway through the year here. We're in month 6. We're in June 2022, and it's fast. And the thing is, like I said it a few months back, if you have debt, do everything you possibly can to pay that off, because it's going to continue to rise. And they're forecasting interest rates to rise right through 2023, and the cost of living just keeps going up, and it's not fun. And so that's pretty much all I got to say today, guys. So we're all in the same boat. It's really uncertain on what's happening. We can't really be accurate in what we say. And this is not financial advice, but just giving you guys the end of the week update here. And hope you guys have a great weekend. Thanks for watching. Don't forget to leave a like and subscribe, and we'll see you in the next one. Bye.